Okay, so on this week of Ecom Weekly Live presented by Aplo Group, we're going to be diving into email and SMS and the high leverage approach for this channel for most DTC brands. So if you don't know Aplo Group, a quick introduction here. We are a direct consumer growth firm. We specifically work with DTC product-based businesses. The vast majority of the brands that we work with are based in the US and Canada, some outside of North America as well. And they range anywhere from startup to high figures in annual revenue on the DTC side. We've worked with over 150 brands, again, in a variety of industries, largely in the food and beverage, CPG, clothing and apparel spaces, where a lot of the experience that we have had comes into play. But we have worked with brands in every single industry out there. So with all of that being said, what we're really going to focus on today is a kind of a theme that we're very big on here whenever we do speak with new brands and we do assess what is the most high leverage thing to focus on the retention channel. And that theme really is going to be the high leverage approach for DTC brands on email and SMS. So obviously this run through is going to apply to most brands out there. There's going to be some anomalies where a different approach is required, but this is really, in most cases, 9 out of 10 times what the most high leverage approach should be to getting the basics and foundations in place before you start going very granular with how you manage this channel. So we're going to dive into it. The first thing we're going to touch on is the two functions of email and SMS. So there's really kind of two core sides of the coin when it comes to email and SMS and retention marketing as a whole. Because retention marketing is used as kind of the term for this, a lot of people look at email and SMS as solely a retention play. But there's actually a very big component of email and SMS that assists with acquiring net new customers and making your paid advertising efforts as a whole more efficient. So one thing that we really always focus on is, again, kind of breaking email and SMS up into these two buckets, and I'll go deeper into both of them here. So on the acquisition side, what we're focused on is generating new customer revenue, lowering full funnel CPAs, by helping to convert a higher percentage of traffic driven via whatever your demand creation source is, whether that's paid media, influencers, whatever it may be. Functionally, if you can convert a higher percentage of people that ultimately hit your website and subscribe to your email and SMS ecosystem, you're naturally going to be making your paid advertising efforts more efficient as a whole, which is just going to help lower your full funnel CPAs and help your business scale more aggressively in a much more sustainable way as well. So a big component of what we're doing both on the flow and campaign side is focusing on this acquisition piece. And I would urge you, if you're not looking at this side of the equation within email and SMS and constantly monitoring how effective is our email and SMS at converting first-time customers, then that's something that you really need to be looking at to make sure that you're always providing incremental gain within that side of the equation. The other side is, of course, the LTV and retention component. And of course, most people that are managing email and SMS and really in the space understand that there is a large impact that email and SMS has on LTV, retention, return customer rate, and repeat customer rate. Ultimately, at the end of the day, what drives the LTV of any sort of product is the product itself. Products that have a higher tendency to be consumed or replenished are naturally going to have better LTV. But within email and SMS, focusing on the LTV and retention side, we can obviously impact that across the board for pretty much every brand out there and pretty much every product category. But ultimately, the product is what mostly drives the LTV, and email and SMS and the retention piece within that is what kind of amplifies it. So on the LTV and retention side, what we're focused on, generating return customer revenue, driving higher margin revenue, increasing your return customer rate and extending your LTV, and also keeping an engaged community. And this is, of course, done through both flows and campaigns as well. So moving on, key metrics that we often look at monitoring, and I'll kind of, before I dive into this, I'll really flag that these are not rank ordered in terms of importance. They're not rank ordered in terms of first, second, third, etc. But these are three areas that we're constantly monitoring, constantly looking at, and I would recommend you do the same. So the first is really percentage of revenue from email and SMS, and also ultimately the dollar amount that's being driven through this channel. So a huge asterisk here is that whenever you are looking at any sort of percentages can be very misleading. You have to take into consideration what's being done on other components of the business when you're analyzing this metric here. Naturally, if you're spending a lot on paid acquisition or whatever your demand creation source is, and you drop spend aggressively, your email and SMS revenue as a percentage of overall revenue is going to engulf because you have more sales that are being driven through that return customer ecosystem as opposed to the paid acquisition side. Conversely, if you increase spend very aggressively, you're going to have less percentage coming from email and SMS as you do that, because you're spending more, driving more net new customers in that are purchasing once they hit the site from whatever demand creation source you're using. So it is a good metric to look at. It gives you good context as to kind of the trends within the account, but it always needs to be looked at with context to the greater, broader business, for lack of a better term. And one thing also to mention here is velocity of LTV and new customer AOV and conversion rate. So I would say when it comes to how we approach email and how I'd recommend you look at your email and SMS program is really focusing on velocity of LTV as kind of like a central ethos to how you build strategy. Ultimately, this unlock and increasing the velocity of LTV, which I'll get into in a second, is usually one of the highest leverage things that you can do with respects to allowing retention marketing to be a big driver of business growth. And the reason being is that I'm sure you've heard of lifetime value, and it's obviously a key component of what people do and what people focus on the email and SMS side. But what's almost more important than full holistic lifetime value in most cases for brands that are looking to scale relatively aggressively is what we call velocity of LTV. And that's functionally the rate at which somebody is coming back and purchasing after first order on a 30, 60, 90, 120 day time frame. Naturally, if you can increase the rate at which somebody's coming back and purchasing from you, what that means is you're going to be unlocking more margin from that customer on a shorter period of time. And then you can ultimately reinvest that into growth quicker, which is naturally going to make your ability to scale much more viable financially. So whenever we do audit new brands, or we basically develop strategies for brands that come on board at Aplo, or we're assessing them, velocity of LTV is a huge component of what we're looking at basically solving for and seeing if there's room for us to actually increase that rate of purchasing. Now, in many cases, as I mentioned on the previous slide, what really drives your lifetime value is the product. So if you do not have a product that lends itself to being repurchased, or something that people repurchase on a shorter period of time, think things like mattresses as an example, very long repurchasing cycle, then you're really not going to be focused on velocity of LTV as a primary driver within the email and SMS ecosystem, because you're just really not going to be able to move that needle extensively. So for those brands that are kind of in that more first order dominant game, what we're really focused on within this structure is the new customer AOV and conversion rate. So how can we get a higher percentage of people to buy, obviously, and then how can we get them to spend more on that first order? And that's obviously very driven by offers that we're pushing, so any sort of bundling that we're doing, et cetera. But we're really looking at building a structure on their email and SMS side that is more effective at converting first-time customers, and that is really focused on new customer AOV. Because the same way that, for a brand that has high repurchase rate, if we can get people to come back more frequently on a shorter period of time, we're going to have more margin. For brands that are first order dominant, we're really focused on new customer AOV, because if we can increase how much they're spending on that initial order, we're going to be able to unlock more margin from that customer on order one, and ultimately going to have more to work with respects to reinvesting into the growth of the business. So that is probably one of these two components are probably some of the key central kind of pieces of this presentation, is focusing on these two. Full LTV, don't dismiss it. Obviously, full lifetime value. And when I say full lifetime value, I just kind of mean running lifetime value with brand and ecosystem. You obviously want people to enjoy and not unsubscribe, and enjoy being part of whatever brand you're running. So while we always put strategies in place to improve that velocity of LTV on a shorter period of time, full LTV is something that you obviously have to be aware of and really monitor as well, because you don't want people just to purchase from you on a 30 to 60 day time frame and then to say, hey, I'm fed up with this brand and I don't want to come back and buy. And then lastly is really list health and engagement metrics. So core to any sort of email or SMS initiative, particularly email, is list health and engagement metrics, and ensuring that your deliverability is up to par. That has a drastic impact and direct correlation with the amount of revenue that you can actually drive out of whatever structure you're running. So always monitoring that and ensuring that that is a central piece of what you're looking at is very important as well. So we'll dive into the 4 quadrants of email and SMS now. And basically, again, the theme of this whole discussion here is high leverage, high leverage, high leverage. So what is the highest leverage thing to focus on within every kind of component of email and SMS? That is really our first step at all times, is what is the highest leverage thing to do? We don't want to do busy work. We don't want to do work that makes it seem like things are progressing. We want to tackle and spearhead directly the highest leverage thing first to make the biggest impact that we can initially. And so within all 4 of these buckets, I'm going to touch on what our belief is from a high leverage standpoint, what is usually high leverage for most brands. Again, big asterisks, every single business is different. And there's going to be brands that are on this live or that watching on YouTube that don't fall into this category. But nonetheless, it applies to most businesses out there. So we'll go through campaign strategy, flow strategy, capture strategy, and then creative strategy. And we'll kind of dive into each one in a little bit more detail. So on the campaign side, to oversimplify this entire discussion on campaigns, there is a pretty good correlation with sending more emails equals more revenue. There's obviously a limit in which that is possible. And at a certain point, you're sending way too much and it's just not sustainable. But in most cases, I would say about 90% of the businesses that we've ever audited, which has been hundreds and hundreds of them, most brands can send more emails safely and extract more revenue out of their list. Now, how do you do that? That comes down to segmentation and also personalization. So how can we increase the cadence at which we're sending? By being more segmented and more personalized with our content, which is ultimately going to allow us to send more and actually help deliverability. There's this kind of counterintuitive thought within the world of email that sending too much is a bad thing for deliverability. It's actually a good thing for deliverability. If you're getting good engagement and good good engagement within whatever you're doing, then that's going to be a good signal from a deliverability standpoint, and you're actually going to be able to send more and have better placement as kind of a broad summary there. So really what we're focused on and what you should be looking at is within your campaign strategy, how do I increase my sending cadence as aggressively as I possibly can by being very segmented, by doing sends to past purchaser audiences, window shoppers, highly engaged segments, mixing in some lapsed customers and unengaged segments as well to cover those components of the list, and really being aggressive on this front while monitoring deliverability and engagement metrics. And you'll kind of see a point where you start seeing attrition, and you'll know that, okay, within the structure that I've been building, this is probably the kind of next local maximum of how aggressive I can be before, readjusting whatever approach you have. So that's the campaign side. Send as much as you can while maintaining deliverability and engagement metrics. And ultimately, at the end of the day, that comes down to personalization, being very segmented with your approach. On the flow side, so this is one of my favorite topics to discuss, because again, we're always about high leverage focus here and what is the highest leverage thing that you can do within your business. On the email and SMS side, there has been countless brands that we've audited where we look into their flow structure and it is very, very bloated. And it's not saying that there isn't room to build out many flows and count for many different actions taken on site. But in most cases, if you look at what is actually driving revenue for my brand and for my business and what's actually worth focusing on, there's usually a handful of flows that we kind of call your core flows that ultimately drive the 80-20 of your revenue, specifically on the flow side. And what that means is if you can provide incremental lift within that core flow structure and you can continuously improve it within those handful of core flows, the incremental gain that you get from a revenue standpoint, et cetera, from doing that, as opposed to building out as many ancillary flows as you possibly can within the account to account for as many different variations of action taken on site as you possibly can, you're going to drive more revenue by focusing on those core flows and continuously A/B testing, providing incremental lift within that structure. So that's really how we approach the flow structure in most cases for many brands, is we're basically looking and assessing, okay, within this ecosystem, what are the high leverage flows? We'll get into those in a few slides here. And ultimately focusing on getting those in place, number one, and building them out. But number two is constantly A/B testing them and constantly providing incremental lift within that structure. Because again, those gains within that core flow structure is going to amount to more revenue than that tiny flow that's built out that accounts for a very obscure action taken within your ecosystem. And as you push into the mid 8 figures and beyond within the world of D2C, you can start really making a good rational argument to focus on a lot of those ancillary flows that again are not accounting for a large percentage of action taken on site. But once you get to that size and scale, there's actually a rhyme and reason to really focus on them because they can amount to pretty sizable amounts of revenue. But as you kind of get into the higher 7 figures, lower 8 figures, the core flow structure is typically going to be your best bet to focus on, and that's going to be what's actually high leverage for your business. And you don't want to be focused on just building flows out for the sake of building flows out and to make it seem like you're doing something, to make yourself feel good and feel like you're doing good work within the account, when in reality, you should be focused really on that core flow structure. So that's really how we look at the flow structure and flow strategy for most brands, which we'll get into in a second in terms of what that actual core structure looks like. But on the capture side, so won't spend a lot of time on this piece specifically because I think it's a fairly simple and well-known piece within the email and SMS world, but obviously capture strategy without collecting a high percentage of traffic that hits your site, you're ultimately going to have less to work with on the email and SMS side. And I would just urge any brand that's watching this, test every single possible type of pop-up that you can. There's no harm in testing. And sometimes you might look at this and say, hey, well, if we have a standard sign-up you did and an X intent pop-up, is that going to be too much? Are we going to annoy customers? Most of the time, we'll guarantee you that somebody that lands on your site and sees 2 pop-ups, one on entry and then one on the exit, and goes about their day and goes about their week is going to completely forget that they even saw 2 pop-ups within your site. So I wouldn't worry too much about annoying customers because most customers nowadays are very attuned to a lot of these pop-ups happening. And if you're not leveraging them aggressively in some ways, you're likely missing out on opportunity to capture their information. Obviously, you want to test it and you want to figure out what is the sweet spot, what type of sign-up units actually work, what types of offers that we present on those sign-up units actually work in terms of converting a higher percentage of traffic, etc. But would urge you to test everything, and there's no harm in testing, and ultimately be aggressive here. So lastly, before we dive into what the core flow structure looks like, we're going to talk about creative strategy. So the biggest thing here is really using a mix of HTML and image-based creatives to optimize for deliverability. So in many cases, brands out there are sending large image-based creative. And what that means is, let's say you're building an asset in Canva or whatever builder that you typically use currently, and you upload that into Klaviyo or whatever your sending platform is as just a PNG file that you've exported from whatever builder you built it in. When you do that, inboxes such as Gmail, Yahoo, etc., are going to receive that, and they're going to look at it and they're going to say, hey, this is a large image file. There's no actual copy, there's no text, because they're not reading the text on top of that image because of how it was obviously uploaded and sent as an image file. And they're likely going to mark that as spam, promotional, etc., because nobody's communicating just with large image files like that. So our recommendation is always using a mix of HTML and image-based creatives to optimize for deliverability. It doesn't mean they have to look bad by any means. All of these here are, of course, a mix. And what that's also going to do is optimize creative for size and load speed. So larger image files are obviously slower to load. And whenever somebody's opening an email within their inbox, we all know that most people have no patience for these sorts of things nowadays. So if it's not loading quickly, they're probably going to bounce. So the quicker and snappier you can have it load, the better. And by using a mix of HTML and image-based creatives, you're going to also optimize for creative size and load speed. But I would always monitor and look at that, because that's something that you always want to compress down. The other thing here is ensuring that everything is dark mode optimized and tested. This is something that's often overlooked, and this is something that needs to be focused on, because a lot of people do open their emails, etc., and have their devices on dark mode. Myself included, I have on dark mode pretty much 24/7. And if you do not test and optimize your creative to render properly in dark mode, sometimes it can look pretty funny. And of course, you're likely going to have a decrease in click-through rate at that point. Last piece here is very much leveraging personalization and customer data to deliver a more relevant and personalized experience. There's tons of tools out there nowadays that are being developed. Of course, we're also developing our own tool in the space called Alan that assists with personalization. And that is something that there's so much you can do nowadays from a personalization standpoint. And any sort of personalization that you can do is typically going to increase your click-through rate, your engagement as a whole, and ultimately revenue. So really leveraging that across the board is 100% something that you need to be doing. So to wrap things up really quickly here, we're going to go into the core automations or core flows. As I talked about a few times here, specifically on the flow side of the presentation, I mentioned core flows and high leverage flows to focus on. What you see here are going to be is what we basically deem as those core automations and core flows that are typically the ones that drive the vast majority of revenue within your flow ecosystem, and what we believe you should focus on not only getting in place, but A/B testing and optimizing constantly before focusing on ancillary flows outside of this ecosystem. So on the acquisition side, if you remember back at the beginning of the presentation, we kind of broke things out in between acquisition and retention. On the acquisition side, you have your welcome flow, abandoned cart, browse abandonment, and non-purchaser offer flow. You'll see the links here that sometimes you can extend these flows to. Every brand is different. Every brand has different types of content that they can work with. And there's personalization tools that can staple on top of these flows as well that can assist with lengthening them without you actually having to continuously produce emails to lengthen the flows. So welcome flow, abandoned cart, browse abandonment. Nothing really to dive into detail there with. I'm sure everybody watching this is fairly familiar with these core flows there on that front. But the one thing I will touch on is the non-purchaser offer flows. So if you don't know what this is, very high leverage flow to put in place if you don't have one in place currently. And that's essentially pushing offers to subscribers who engaged during the welcome flow, but did not ultimately purchase. So people that were highly engaged in that initial welcome series, but didn't actually click through and purchase. And ultimately what we're doing here is we're identifying them as highly engaged window shoppers. So people that have been looking, they've been clicking, but they haven't purchased. And in most cases, if you have some sort of offer here to push, it'll be pretty successful at converting some of that traffic. The second piece of this is the retention flows. So the kind of LTV retention focused ecosystem. Basically, what we recommend is breaking your post-purchase sequence between pre-delivery and post-delivery. You can use tools like AfterShip, etc., to basically trigger these once the package has been delivered. On the post-purchase side, we're really focusing on education. So educating them on whatever they bought, the brand, etc., use cases, also doing some cross-selling. And on the post-delivery side, actually, after they've actually received the product, we're really looking to do more aggressive cross-selling, review, push, etc. You have this window here before somebody receives a product where they're very likely to open most of your marketing material because they're waiting for the product they've just purchased from you, and they're very highly engaged. So it's a great opportunity to educate them and also do light cross-selling, but also prime them for more cross-selling after they've received the actual product. We then have kind of product specific or collection or even demographic specific branches that you can build within this post-purchase sequence that basically focuses on more tailored journeys and contents based off whatever collection or item that they've entered on. For brands that have consumable products, replenishment sequence is a huge one. So this is basically focused on incentivizing customers to repurchase in an optimal time window. So specifically for people that are one-time purchasing and not subscribing, you can essentially trigger this at whatever cadence after they've initially bought the product based off how quickly, you think they're going to actually consume whatever it is that they've purchased. And then also win-back sequence. Key thing here, all flows being built out with different journeys for first-time buyers and repeat buyers is very important. And then lastly, we have the recovery flows. So the recovery flows kind of play into both the acquisition and LTV and retention side. Talked about the abandoned cart, browse abandonment, and actually only talked about those two. The other two here, session abandonment, huge one here. Would recommend you put in place if you don't have that, essentially targeting people that were active on site but did not browse a product page. And then also the sunset flow. So just kind of a list cleaning mechanism to clean up the list and ensure that you're not actually sending to people that are not worth your while to send to. So that is a wrap on the live session that we have had this week. Again, the main things focused on here is what is high leverage within the email and SMS ecosystem. There's a lot more that can be done, and there's a lot more that should be done for brands that are in different phases of their journey and their growth. But for most brands, the highest leverage focal points are what we went through today. And naturally, as you get larger, there's more rhyme and reason to focus on other components outside of this. But specifically, as you're kind of in that 7-figure, low 8-figure range, this is typically going to be your best bet to focus on, and is going to be what's most high leverage for your business to constantly improve, because it is going to be what's driving the vast majority of your revenue. So if you attended this week's live, make sure to, of course, register for our upcoming lives. If you're watching on YouTube, make sure to give us a subscribe or a live or register for our upcoming lives in following weeks as well. And hope you enjoyed the session here, and thanks for watching. And that's a wrap.